Welcome to a brand new week, everybody. Scott Riley, the Market Update Desk, NMLS number 157524. We got a little bit quieter day in the market because there's so much happening towards the middle end of the week. I wanted to go over what we think the Fed is really going to be focused on when they start their big meeting later this week, their symposium. Now, we know that the weakness in the labor market is something the Fed is very focused on and will, in all reality, determine whether they cut 25 basis points or a quarter point or 50 basis points, which is half a point, on the September 18th meeting. They'll have some additional jobs data to review before that meeting, as the BLS will release their benchmark revisions on Wednesday. That's their annual revisions looking backwards on overestimates or underestimates of job creation. Now, this is going to show the revised data up until March of this year, so the 12 months. And while it's old, being that it's through March, probably not too market moving, but it will let the Fed know more detail on how strong, or in this case, weak, the market really is. In fact, Goldman Sachs estimates that the BLS revisions are going to amount to a negative revisions of somewhere between 600,000 and 1 million jobs, which would be significant and show that the jobs market is not this freight train that we have been sold in the media and by the politicians. Now, also on Wednesday, the QCEW, that's when we talk a lot about the quarterly census on employment and wages, will release their preliminary job revisions for quarter one of this year. Remember, the fourth quarter last year showed just shy of 300,000 jobs that were never created. Now, this too will likely show that the BLS continues to overstate jobs, specifically within the category of the birth-death model. The biggest report ahead of this September 18th meeting is going to be the August jobs report. That's going to be released September 5th. So it's coming up very soon. Now, if that unemployment rate remains at 4.3% or higher, it's going to give the Fed a lot of pressure to go half a point in a cut. If it comes back a little bit to, let's say 4.1%, 4.2%, that's going to give them cover or credibility to really only go 0.25%. So that's going to be the biggest factor there. Now, this meeting that we're talking about is the annual Kansas City Fed Symposium in Jackson Hole. And this brings global people to this summit. And it's a very, very, very important meeting for the whole year. In fact, let's take a peek. I did some numbers here on where we were last August for this meeting and where we are this August. Now, when we look at the numbers, the core PCE last August was at 4.3%, so just 12 months ago. Now, that has come down dramatically to 2.6%. Not as quick as what, for example, Michelle Bowman would want, but that's a large decrease. The core CPI was at 4.7%, and we're sitting now at 3.2%. So that's 1.5% drop. Unemployment rate. Now, I'm not saying we're historically high for unemployment, but we have gone up very quickly in relation to where we were to where we are now. We were at 3.5% unemployment, and now we're at 4.3%. The 10-year Treasury, it's had a lot of vacillation up and down, but we were sitting 4.15, and today we're sitting just a tick under 3.9. And the Fed funds rate was 5.75 then. So where are we going to be after this meeting compared to where we are now? The difference of going a quarter to a half, like we said, is going to be really indicative of their interpretation of the employment market. And we talked about it, a year ago. We were really ahead a lot of the other media sites talking about, well, that's inflation number that's going to be the driver. And we talked about, no, it's going to be the unemployment number. And there are forecasters that are putting out there that we could, in the next couple of months, go from 4.3 to 4.5% on unemployment. So let's see where that all takes us. So let's break down this week. Wednesday, we get the Fed minutes from the last meeting. That's always important. A 20-year bond auction which is always a nervous thing because the last couple 20-year auctions have not gone all that great and put upward pressure on bonds. Thursday starts the Jackson Hole meeting and existing home sales. Friday, new home sales, and then Chair Powell gives his much anticipated speech on Friday. So those are very important things. On a technical aspect, it's been very good. We've had top resistance levels holding for us. So for example, the 10-year last week tested 3.92 and held. That was a very important level. And now we're sitting at about 3.84. So the next resistance level on the downside is 3.80. We did creep below that for a very brief time 2 weeks ago. So we're going to see where these resistance levels, if they help us out and give us some bracket protection there. We'll keep breaking everything down for you. Give us a call. We'll help you get pre-approved, break down these numbers, answer questions for you. 616-293-2189. We hope you enjoy this information. Thanks so much and have a great afternoon.